Right, welcome to the channel, ladies and gentlemen. We knew this was going to happen. This was, of course, inevitable. But I don't think people realise to quite what extent. They are billions down. Billions. And interestingly enough, the majority of it actually comes from the parks. About over 3 billion. We'll get into it and the actual nitty-gritty of it all. But yeah, they're Disney. Obviously, we're talking about Disney here. It's here, and the title. Major problems. Major problems. So this is an article by the LA Times. Of course, you know, July, it's another quarter. So they've just released their earnings, their quarterly earnings. And it's a net loss. It's a net loss. In fact, I think it's over the amount that they ended up paying for Star Wars, which is, there's some sort of irony here between what, you know, I think LA Times may be trolling, because obviously they've got the Bob Iger and Bob Chapek standing at Star Wars Galaxy's Edge theme park, of course, you know, which they purchased, well, Star Wars for over $4 billion or something like that. So let's get into this. And obviously they're saying blame COVID, and yes, that is partly to blame, of course. And when I ever do these videos, a lot of people always go, every studio's got problems right now, and yeah, they do, but nowhere near as big as Disney, because Disney have overstretched themselves massively. Not only is Disney as a company just a studio, but they also manage a lot of theme parks and, you know, a lot of assets, and that's why they've overstretched themselves. They purchased too many companies, and then obviously this happened. No one could predict this happening, FYI, but it also goes to show the importance of having a cash value, whereas they don't. Like, it's all stocks, you know, and all the profits go off to the relevant people, and then that's it. They don't really sit on cash, and that's why they're losing a lot of money. A lot of people are having to be, well, fired, moving forwards and things like that. So it's terrible. It's a terrible time. But let's dive into it, shall we? So Walt Disney Company suffered a major decline in earnings in its third fiscal quarter, illustrating the severe damage dealt to the world's most powerful entertainment company by the COVID-19 pandemic. And I'll agree with that, definitely, but they're big because of, you know, overall value. They're not big because they have a lot of value sat there in the bank. It's all stocks and shares. So obviously, you know, Disneyland has been closed. It's created global tourism in terms of like decline, COVID-19, and delayed numerous movies. But Disney didn't have a lot that they were looking to release. It was Mulan, Black Widow. Speaking of which, Mulan, I've got another video coming today on Mulan, because that's taken an interesting turn, and I was definitely wrong with that. Whew, interesting, really interesting turn. Now, the Burbank entertainment giant posted a net loss of, check this out, $4.72 billion for the 3 months that ended in June. Jesus. This is what Disney said yesterday. Now, that's compared with the $1.43 billion in net income the company reported for the same period in 2019. That's huge. Good Lord. So they may have done these amazing, absolutely amazing movies, made so much money. They didn't make a lot of money, because Endgame cost a lot of money. So the amount that they took back wasn't an awful lot. But yeah, $4.72 billion. Ouch. That's people are not happy. That's not good. However, the media and entertainment titan did better in terms of profit than analysts expected, thanks in part to growth in its TV and streaming businesses. Excluding certain items, Disney posted a profit of 8 cents a share. I like that, but then I like how they phrase it, and then they go, down 94% from the same period of time a year ago. I mean, that's awful. Analysts polled by FactSet on average had expected a loss of 64 cents a share. None of that's good, guys. None of that's good. Total revenue for Disney was $11.78 billion, down 42% from a year earlier, and analysts had estimated $12.39 billion in revenue. So yeah, I mean, it's all down, isn't it? Disney stock rose actually 4% in after-hours trading on Wall Street after the earnings release. That's because people are buying them up because they're cheap. That is going to happen. I mean, of course. The driving force behind the earnings decline, of course, was the coronavirus. Disney estimated that its parks experience, and this is the shocker, and it's not really a shocker, but it goes to show just how much of like a dead weight they are when a time like this happens, but also how much of an earning they are when they're actually booming, and goes to show where Disney actually the majority of its income comes from. So its parks and experience and product segment alone suffered a 3.5 billion hit to operating income because of the effects of the pandemic during the quarter. That's the majority of it. I mean, that's insane, isn't it? That's absolutely staggering. Now, Disney closed its domestic parks and Disneyland Paris in mid-March amid growing public health concerns surrounding the coronavirus, and the crisis has taken a deep toll on the entertainment and hospitality industries overall. But Disney was particularly vulnerable. Its mighty movie studio primarily makes films designed to be seen in theatres, which remain largely shuttered in the US, and Disney's biggest business, parks and resorts, have suffered from months of closure. So it's parks and resorts, which I guess goes to show like why they were purchasing Fox and certain assets, because they want to bolster their movie industry part, that movie side of it. Because when we think of Disney, we do think of movies, don't we? But the amount of movies that they actually post under the Disney banner is not that many. There's really not that many that they do. They're not on a yearly basis. They've started to increase it, and I think that was Bob Iger, in fairness, that sort of did that. Now, Disneyland remains closed indefinitely as the pandemic continues to grip California, while Disney World in Florida, where, despite surges in cases, the government has loosened restrictions on the economy faster than in many other states, probably because of tourism, I'd imagine, reopened last month with limited capacity and strict protocols to limit the risk of spreading the coronavirus. And then they go off on, Shanghai Disneyland was the first Disney resort to reopen, welcoming back guests starting May 11th with pandemic-driven restrictions and rules including masks for employees and patrons. The company's parks in Paris and Tokyo have also begun phased reopenings, and Hong Kong Disneyland reopened in June, but shut down again last month because of a rise in coronavirus. If you didn't know what my face was there, I'm pulling that face because Hong Kong is suffering at the hands of China at the moment, and it's awful to hear. Now, they go on to say that the revenue for parks, experiences, and products, normally a powerhouse for the company, collapsed 85%. That is insane. To 983 million in the quarter. The division's operating loss was 1.96 billion. Right? That's a loss compared with a profit of 1.72 billion. So they're working at a loss. It's not even like fine line, just even, right? They're working at a huge loss during the prior year third quarter. Simply put, the parks are bleeding cash with no end in sight. Yeah. They're done. I can't... Long-term projections on this, how are they going to come back from this? They're going to have to generate so much debt. They're going to have to incur debt to create cash to pull themselves out of this hole. Because they're in massive debt as it is. How are they going to keep going? I guess I could water down the shares. The stocks just keep selling it, I guess. While the surge in COVID-19 cases gives us some pause, Disney seems well poised to gradually tap into pent-up demand amid a phased reopening of parks and a gradual return of live sports events. I don't know whether I agree with that. At all. Sadly, in the UK, what we're experiencing is terrible. People just don't want to go back out, don't want to go and do anything. Our government has introduced this Eat Out to Help Out scheme, where they're offering government subsidies to the restaurant and catering industry. 50% off, people can go and eat out. And I don't think it's helping that much. So it goes to show that I don't think parks are going to be reopening anytime soon, which is a shame. Obviously, the true test will be in a couple of weeks' time when the theatres are really reopening. We'll see what happens there. But it definitely, I think a lot of people have underestimated the level of panic driven into people by the virus itself. Not saying whether that's right or wrong, but I definitely think this statement here, Disney seems well poised to gradually tap into pent-up demand. I don't think that's right at all. With no new theatrical releases, the company's film studio generated 668 million in operating income, down 16% year over year. Revenue was 1.74 billion, down 55%. The studio's highly anticipated Mulan remake has been delayed multiple times because of theatre closures. I have a video on that because it's actually not going to theatres. What? But I think that's all to do with China on a whole, I guess. Now, I'm not going to, again, I'll touch on that whole Mulan thing in another video because that deserves a whole video in and unto itself. On the bright side, Disney Plus has surged during the public health debacle as viewers flock to streaming services. So yeah, I mean, look, Disney Plus is up. There's 60.5 million subscribers, the company said. In May, the service had 54.5 million paying customers, and a Disney Plus subscription costs $7 a month on its own and $13 a month when bundled with Disney's other digital offerings. Whether that's worldwide or not, I don't know, because I know it's opened up here, so there might be, there might be a lot of that over here. I don't know. Now, interesting. It says, despite the ongoing challenges of the pandemic, we've continued to build on incredible success of Disney Plus as we grow our global direct-to-consumer businesses, Bob Chapek said in a statement. The global reach of our full portfolio of direct-to-consumer services now exceeds an astounding 100 million paid subscribers, which is a significant milestone and reaffirmation of our DTC strategy, which we view as key to the future growth of our company. Well, no shit. And the article continues and says, though Disney Plus has proved a clearly formidable competitor to Netflix, analysts worry that the service will actually suffer from a lack of fresh content after the coronavirus hobbled production of new shows and movies. Marvel's Falcon and the Winter Soldier, for example, was delayed. However, Disney Plus will get a boost in October when it hits The Mandalorian returns for a second season, which was filmed before COVID-19 just screwed the industry as a whole. So there you go. I mean, look, that's madness. That is madness. So how are they gonna? What's gonna happen here? Obviously this video is just to break it all down. But long term, how can they come back from this? Long term, can they come back from this? I mean, ultimately, the 3.72 billion, was it? 3.72 billion in terms of the parks. I mean, that is just absolutely staggering. I think that's where they lose it all, isn't it? That's where they lose the majority of their money. Are they going to sack off the parks, or are they going to look to just push it moving forwards? I think it would be wise if they closed some of them, because ultimately, is the mass hysteria that's gripping people now, is it going to be long term? I think so. So there you go. Let me know your thoughts on this down below in the comments. I'd love to hear it. Disney, could they be done? Who knows? Ultimately, they're never going to be done. They're always going to be purchased by someone else if the worst comes to the worst. Hopefully, they're just going to end off selling some assets like Alien and Predator. That'd be good, wouldn't it? But let me know your thoughts down below. Again, stay tuned for the Mulan video because I think that'll be interesting in and unto itself. Thank you all so much. I've been Mr. H. Take care.